Even though the stock is still down from its highs over the summer, SoFi has been a great bank stock for investors in 2023. Shares are up about 46% year to date. You might be wondering if it can continue being a winning investment. Honestly, there are challenges with the company. It spends a ton of money on customer acquisition, and that's one of the things that's prevented it from really being able to be profitable at this point in its existence. But I do think there's a lot of really good signs, and three key things that I want to highlight when we review its financial results for the third quarter here in a minute. I'm Jason Hall. This is The Smattering. Before we get into SoFi's earnings and talk through those key things that I think are really paying off for investors and really important to understand, this video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, go to our special link, fool.com/The Smattering. The Motley Fool is going to give you its 10 best stocks to buy right now. Please check that out after this video. Okay, I'm going to pull up SoFi's third quarter earnings presentation. We're going to highlight a couple of things here. The first thing I want to say before I even start pulling up the key slides is this is the company's presentation. It's always important to remember that you want to take what management is selling with a grain of salt. It's their job to put the company in the best possible light. So as much as we rely on these numbers and these presentations to help us reach our own conclusions, you always want to view them with a skeptical eye. And there's a couple of things that I think are important to highlight about SoFi that we'll get to as we're working through this presentation. But the first thing that I want to highlight is the thing that they lead with, because it's really important, and that's members. And they define a member is a person or a business that does business with SoFi in some fashion. Maybe they have a spending account, maybe they have a loan, one of the personal loans, maybe a mortgage, maybe they have a trading account and they do some stock trading with SoFi or one of the other services that it provides to its members. That's how you fit in this bucket. And 47% growth, the blue bar at the very end, almost 7 million members now. This is substantial growth. We look at the 2021 period, massive growth. They went public, they raised capital, they used that capital to fund aggressive customer acquisition. These triple digit rates, high 70, 80% growth rates, those were never going to be sustainable forever. But an important thing that a lot of us have been watching for is looking for signs that those growth rates were stabilizing. And we've seen that. Again, it was 44% in the second quarter, 47% in the quarter that just ended. That's better than it has been since any period since 2022. So that stabilization and moderate reacceleration of growth, I think that's a really attractive thing to understand. And again, 717,000 new members. That's the number of new members that it generated back in the third quarter of 2021, very close to double at any rate. So that's a pretty impressive growth rate that they're able to sustain in their number of members. Now, products are driving it. So there's products, and this is important to remember because the products are basically two things. They're loans or they're financial services products, whether you open one of those accounts that we talked about, or you take on, you're a borrower through SoFi. That's the kind of products that we're talking about. And again, the same thing, just as with members, we've seen those super high growth rates continue to decline and then some stabilization, right? That stabilization is hugely important that we've been able to see that. Financial services products growth rate is still really high. People opening different kinds of accounts, trading accounts, checking or savings, their spending account, that growth rate has stayed incredibly high. Now, lending, people borrowing, that number, again, 24% growth, much lower than the financial services products. But I think the thing that's really important to me, as we've seen interest rates really increase from the beginning of 2021 through recently, stabilized growth rates in that mid-20 range is most banks would love to be able to be growing their lending portfolios by that amount. So it's a really steady, stable growth rate that's impressive, particularly in the face of rising interest rates that we've seen over the past year and a half or so. Now, let's carry this over and let's talk about some of the key metrics in the business and how its growth rates are really starting to pay off with a profitability flywheel. Again, very high growth rates. We look at its revenue growth of around 27% in the quarter. That number has continued to grow at a slower pace. But again, 27% growth is a really attractive number. The percentages are lower, but the number of dollars of revenue that are generated continue to be larger and larger because you're starting off at a higher base revenue amount. And as a result, you're starting to get some of those operation efficiencies that you want to see businesses get at scale. And one way to measure that is looking at EBITDA margin. Again, you don't want to use EBITDA or adjusted EBITDA or any of these numbers as a final way to value any business because, well, the bottom line is that interest, taxes, depreciation, amortization are real expenses for a business. They're real. You have to consider them. But when you're thinking about looking at the internal profitability, it can be really useful. And that EBITDA margin has steadily continued to improve. And that's a real positive sign that as SoFi continues to add members, continues to grow its scale, at higher scale, it's moving closer and closer to profitability. So I want to talk briefly about SoFi's guidance that it has given, because Wall Street analysts, they always give their guidance for companies that they're covering for revenue and earnings per share. But not all companies give guidance too. But SoFi is a company that does consistently give guidance every quarter for what their expectations are. And if you look at their guidance, if we start right here, this is the guidance that they initially gave us at the end of Q2 when they reported their Q4. They gave us that guidance of just about $2 billion in revenue, a little bit less than $2 billion at the midpoint of guidance. 25 to 30% growth rate was their expectation, and adjusted EBITDA margin of about 14%. They revised that after the third quarter, and now they're revising it again. They keep revising it up because they continue to see faster member acquisition and growth of the loan portfolio and growth of their other financial services products at a faster rate than they had been initially expecting. That is a real positive when you think about any business, its ability to grow even a little bit faster than management anticipated. That's a good problem to have, for growth to be faster than anticipated. And again, we're talking about initially expecting revenue to grow less than $2 billion this year. Now they're expecting revenue to grow more than $2 billion this year, somewhere about $2.05 billion, roughly at the midpoint of guidance. So again, that's positive, right? Again, around 34% revenue growth at the midpoint when they were expecting 25 to 30% at the beginning of the year. Here's the thing that's most impressive about that to me is how much more profitable they're now expecting the business to be at this larger scale. Adjusted EBITDA margin target is now 19%. That's substantially higher than the 14% they were expecting at the beginning of the year. Again, you look at the trajectory of improvement in that metric over the past few years, 9% to 19% from last year to their expectations for the full fiscal year 2023. That's more than doubling of your EBITDA. That's a big step forward. And what management is now telling us is that this guide, they now assume that the fourth quarter of the year, they're going to be profitable on a GAAP basis. A couple things. That's only one quarter. That's only one quarter of profitability that they're talking about. So got to keep that in mind. Take it with that grain of salt. The other thing, it's still just a projection. There's a lot of things that can happen that could undermine the expected outcome and not deliver that result. But I think you put it all together as an investor in SoFi. I own shares of SoFi. I think this is proof positive that the things that we've been looking for with SoFi, management is delivering on those things. With that said, they have to continue to do it. They have to continue to demonstrate it across economic environments and for a sustained period of time. Take it and you put it all together, and I think SoFi looks really attractive right now, whether you're looking to start a position, add to a position. I think SoFi definitely should be on investors' lists of stocks to buy right now.